G'day, Traders Mindset Reset. Today we're talking about probably one of the most important topics we can go over, and that's the opening range. I know I'm going to beat this to beat a dead horse. The importance of the opening range is critical because traders are getting into markets that literally do not have any setups because they're up high or down low. And what I want to reinforce is this: you make money on parabolic trade opportunities, and the opening range establishes the initial high and low of the week. I want to reinforce the importance of the opening range because if you grasp this, everything else will come together. And that's what glues things together in terms of other time frames, 5-star parabolics, session parabolics, the whole thing. The opening range establishes the initial high-low for the week. And what that can do is this: it can do nothing. It could be an inside day, not touch any other high-low, previous boundaries, or anything. It may break a previous weekly high or low. It may be a narrow range day. It might be a day that is a peak formation at the high or low of a month. We got a new month coming. Pay attention to this. I'm going to repeat it. We're at the beginning of a new month at the end of this week. New timing cycle. So next week we're going to see some big moves, guaranteed. Every month happens. We're going to see some large parabolic opportunities. So the opening range allows us to form a thesis for a best trade setup. So write this down. After the opening range, one of the things that the market will do in a market that's potentially going to be setting up is they will break out. They will break out of that opening range, whether that's in the opposite direction to what you think or in the same direction to what you think, but they will break out. If they don't break out, don't even need to worry about it. You could be in a trading range, but it might be a 100 pip box trading range. You might get something on Friday. But point is this: it says if they're going to break out, let's look at the Asian session. Day one, the Asian session on day two is a fantastic time to look for parabolics, because if they're going to break out, you will have a parabolic opportunity potentially in Asia or in London. Pound Aussie, Euro Aussie, Pound Yen, Euro Yen, Aussie Yen, Aussie, New Zealand, Yen, Euro New Zealand, Pound New Zealand. You know, it could be any one of those. And it may be on day two, Thursday. Because why? Because Wednesday is our day three, which becomes our new day one, heading into the end of the week. Wednesday, Thursday, Friday, day one, day two, day three. So there are huge opportunities. This morning we had parabolics in Asia that reversed. They were opening range breakouts, and they reversed for parabolic explosions in London back through the high of the week on day two. So we get to gold. Gold had not broken any boundaries yesterday. Monday's opening range was an inside day, and I know traders are trying to trade it, and I'm going to reinforce this. I'm going to repeat it. I won't trade that, because until the big picture sets up, I need a bigger picture thesis, 3-session setup: peak formation high, peak formation low, consolidation for a vertical move. Monday, 3 levels of rise, back to the high of the day, sideways for 4 hours, boom, straight down at the beginning of the hour. So that is a textbook template on a day one where no boundaries have been broken. That establishes the initial high and low for the week. We're an inside day. We haven't broken any boundaries today, which means it's a lower probability day. Dalton market profile. If you're just trading in a normal high-low range, it's a normal day, but it's lower probability than when a market breaks out. Now, if you can identify where the setup is that is potentially going to break out after 3 sessions, peak formation high, peak formation low, 1 push, 2 push, 3 push, new hour, vertical move. Breaks out of the low of the day. We already triggered the low of the day for the pump up. That triggers shorts into the market early, the hourly traders. It closed, and then for the next hour proceeded to go back to the high of the day. A vertical first hour trade for traders that were switched on and saw that. Second hour breaks structure and pumps back up into the high of the day before breaking down at the New York Open and then collapsing on the news in the third hour. We had continuations, Euro Oz, Pound Oz for the long trades. They dumped it down and then continued back up. Indexes exploded after coiling sideways and going vertical on the open. The DJ30, an explosive coil right on the open for 75 pips vertical. I don't know what's happened since. But oil broke out of the low of the day, peak formation low, first hour, coiled sideways, second hour, New York Open explodes back into shorts from the London session. So the opening range, if it's been broken, when I come to the screen for New York, it allows me to form a thesis for the session that I'm trading. For a reversal, a trend trade, whatever that may be. And as I said, parabolics are where you make your free cash. They explode, they go vertical. Now, on oil, we had a market that had triggered Friday's high. Same as what we saw on pound Oz. I believe it was pound Oz or Euro Oz. They broke the high, but they didn't break out or anything. It was just the opening range. Established a high and low for that day, and went parabolic in Asia straight down on day 3 from Friday's breakout of Thursday's high. Day 1, day 2, day 3. Opening range is critical for you to understand heading into day 2. Day 2 offers parabolic trend trade opportunities, reversal trade opportunities, and it can also set you up for the London session if there is a breakout. If we head into a 3-session opportunity on day 2, if we haven't had any breakouts, we still then wait for the market to set up. No setup, no trade. It is set up perfectly for New York session, and from there it went vertical all the way down through the low of the day. So keep it simple, traders. If you master the opening range and understand what that means once they break out, or if they're coiling inside for a setup. So as traders have said before, I thought you said you didn't trade inside. I'm trading from the inside if there's a setup. That's the only time though. So once you break the other time frame boundaries, and now you trigger other time frames into the market, hourly, daily, weekly, 4-hour, all those other ones. Now you've got other time frames potentially driving that move. We're gonna have 5-star opportunities this week. We're already getting movement. We've already had fantastic trades. It will not stop, it will continue. Day 1, day 2, day 3. Master the opening range and understand what that information is giving you. Have a great day, traders. Great workout, and may the markets go with you.